Good afternoon, traders. Mark here from Day Trading Room. Time is it's approaching 2 p.m. London time, so 30 minutes until the US Open. Done the preparation. We'll see what the last 30 minutes brings in terms of price movement, and see if we get any opportunities today. But really, just a quick video. I had the members webinar on Thursday, and we spent a lot of time, or I spent a lot of time talking about discipline and overcoming trading hurdles as one of a three-parter that we're doing. And in particular, we spent an awful lot of time talking about revenge trading, as that seems to be quite a common theme that a lot of us as traders have done in the past or are struggling with at the moment. So we run through some solutions for that, get that habit kicked into touch. And because I spent such a long time and I didn't get opportunity to go through one of the days from last week, which was actually the Thursday the 12th, where I was going to run through the whole day, basically the pre-open plan, why I decided to do what I did, why I entered where I did, the mistakes I made on the trade. One of a pretty big mistake, obviously, it didn't affect it too much. Not obviously, but it didn't affect it too much. It was a nice trade, but it was a big mistake, and it probably cost me a couple of $1,000 by making that mistake. But it was a good trade, really, because in terms of learning from it, because I'm going to run through the whole thing from the plan to the execution to why I did what I did and the final exits and the targets, etc. So we didn't have time to run through that, as a couple of guys in Australia were there, so wary that over us running the time. So we'll stick this on YouTube now, and we'll talk about that day. So day in question was Thursday the 12th, and if I just get a marker pen here, we are around about here. Excuse me. So that was the open on the 12th. And this is a 60-minute chart, by the way, 24-hour Dow chart. And on Twitter, I'd said a couple of times how useful these levels were on the 60-minute, and I've just been looking at them constantly. And the day before, the pull back up to it was just, and also 2 days before, we were hesitating by it and dipping under, and it was just a nice level. And it's actually come back into play recently, and we're right back in. Not going to divert here and talk about today's action, but we're right in this little range again today right now, so that's going to be some great levels to work off. We'll see if we approach either that or that today. But anyway, back to the topic of the video. We've come down quite a lot. There was the high of the 60-minute, and now we're pushing at the low. And if you can imagine, this is where I was looking at from this point here. We've got this little downtrend channel in place. Not that I'm a big fan of these channels, but other people are watching them. You can frame your trade a little bit using it. We've been hugging this lower VWAP on the 24-hour, and we just, we'd suck people on the long side up here as well. So all of those have probably been well and truly stopped out by now, especially as we put in a low, pulled back, failed, then took out that low. So I'm assuming most people are out. Maybe some people are starting to get short. So when you get that sort of 3-day move to the downside, and you get a lot of bearish people coming on the wires, etc., etc., you probably do a little bit of a counter trend push. I'm not looking for anything extreme. The fact that we got it the day after and a push right back up, it doesn't matter, but for that day, I had some ideas in mind. So what were my ideas, and how was I looking to position? Well, interestingly enough, the overnight low on here, on 60-minute, if you worked it out, was the equivalent of the cash 12,500. Big old level. So we've got the overnight low put in. We've got a little bit of a stretch market. Well, I'm considering a stretch market. Not that that's a reason enough to take a trade on its own, but still 300 points from a couple of days ago, from top to bottom. Reasonable move. No big catalyst as such that I can recall. Maybe there was, but I can't recall there being a huge catalyst. So I'm just thinking maybe a little bit of counter trend push back up, back up to this sort of level. So anyway, back to what I was saying. Overnight low was around 12,500 cash. Nice level, psychological round number, and obviously the overnight low. Nice stretch market. So my idea for the day was, let's have a look. What I'm going to do now is I'm going to bring in a 1 minute. My plan for the day was this. Okay, we're opening lower, and we're actually opening pretty much on the prior day's low for the 24-hour, not for the 24-hour session, for the regular trading hour session. So my idea for that day was to buy at a good point. Now, a good point for me was the overnight low, just under the overnight low, or just under 12,500 on the cash. But obviously, I'm going to give a little flexibility on that, because I'm going to have to read the tape when it gets there. I don't want to stand in front of a train and take 30 ticks of heat. I wouldn't take 30 ticks of heat anyway. I'd be stopped. I want to judge it. If I have to, if for example, let me just bring a drawing pen out again. That's not a drawing. If for example, let's just say that this was the level I was looking at. If the market approached it and we start to get a stall there, then that's fine. I'll take the entry. If the market approaches it and plows through it, okay, pulls back, and then maybe I can look for, instead of taking the entry there, I'm looking for the buy below it. I'm just adjusting, tweaking the plan to suit. So maybe I'm then looking for a double bottom, or a higher low, or something then, some sort of bottoming pattern in conjunction with that key level to take the long. So I'm not completely strict with it. You've got to give yourself a bit of flexibility, a little bit of tape reading involved, a little bit seeing how the market's going to trade. But that was the idea. The idea was that. And the targets for me, three targets actually. First scale, which I always do at sort of 10 to 15 ticks, just to get some off the table, to reduce that risk, dial back the size. And that's basically the reason I do that, as I've mentioned before, is that I'm utilizing my tape reading. That's one of my biggest edges, is reading the tape, reading the short-term order flow. And if I can leverage on that by taking some off the table quickly, it takes a lot of risk off the longer term trade, the larger move, should I say, and puts me in a more comfortable position. So I just leverage on my strengths, and that's what trading's about, leverage on your strengths. So first scale is always going to be that. Second target for me is back to the open. It's a logical place to look for. If you're trading that rotation move, if you're trading that counter trend extension and push back up, then back to the opens, it's a pretty mediocre target, if you like. You got your VWAP will most likely be before that as a little bit of a stalling point, but coming back to the open, if you're looking for that sort of dip and reversal type day, is a logical place for a first target. And final targets for me was up at the gap, and you can see where I'd put these in as I put the trade. It's just as the markers to look for. And now for me, holding trades in a longer time, for a longer period over several hours, is something that I don't do an awful lot of, because if I'm trading a lot of volatility, then I like to trade more setups interim, and I'll use that as a final sort of judge. If you see what I mean by, that's where I think the market's going to, and it's working, and I will trade in and out of positions on the way to that by buying a sort of spike lower or continuation or whatever. Very rarely do I hold trades from sort of entry to maturity, but this time, and also at the moment with summer, it actually paying to do that, to put some positions on and let them mature to your full target. Sometimes you've got to wait a long time for it because the volume's low. So pretty much we opened, we drove lower, we pushed higher. I like that. I thought actually that I missed it at that point because it was quite a strong move higher after that low. We nearly got back to the open. Then we drove lower again, and there was a sort of 3-4 solid candles lower, and I got an entry a couple of ticks off the low. It was actually it was a nice place because we just poked under. I think we're at 12,495 on the cash, and we just stalled nicely. It was a little bit stretched. Ticks weren't that extreme, so I'm a little bit cautious, but I quite like it. I think that it's at least be able to get my first scale off. Even if we do pull back and push again, I think I'll be able to take the first scale off. If I have to take a stop, I can have another go at it. But it was a good entry. It was a good entry. Nice little read on the market. Pushed up, got my first scale off, which was here, and everything's starting to fall into place. Now, if you've pre-prepared a plan and the market is doing what you expect it to do, and you're in the trade, then let it pay you. Let the market pay you for being correct. It's not about being right, but if you are right, you've managed your risk, you've taken some off the table, then sit with the trade and let it mature. I know it's something that I'd say it's a weaker part of my own personal trading, is sitting with it and letting a trade mature. I'm very much more active and into the short-term order flow reading. But when the conditions are right, it's the right thing to do. So the scale was there. Another scale here. I gave it a little bit of room to breathe here. I just like the fact we put a high tick reading down here, and the ticks hadn't gone lower. But we just sort of started to struggle, so I just knocked a couple more off as we poked above there. Anyway, now I sat through this and said, okay, well, I'm going to look now for my final targets. But at the same time, I don't want to leave money unnecessarily on the table. And this is the conflict you've sort of got. And we'll go through, this is where I made a bit of a crucial mistake here, and it probably cost me quite a lot of money. I took another couple off here, and that was literally because I sat through a bit of a cycle lower, and we hadn't gone to a new low. I'm looking for this now to push up, and this is where I'm thinking, okay, let's get into gear now. Let's get some high tick readings. Let's some volume coming in. Let's at least clear out the open and start to do some work up here. I'd be more than happy if we started to just, even if consolidated up here, to sit with it and let it mature and fill the gap. But we didn't get it, so I'm still sort of, you know, and bearing in mind the scale of this, guys, it's not huge. There's not a lot on the bank here. It's only just sort of pushing my way. So I'm sitting with it and I think, okay, I'll take a couple more off. Took a couple more off there on that little spike there. Let me just take the drawing pen off. I might zoom in a touch if I can. There we go. So I took a couple more off on that little spike there. Again, take read after the fact that we couldn't break a high. I thought, okay, we'll just take a few more off on that point there. And this is the mistake of the trade, really. As we push lower here and we started to consolidate, you know, we put in this slightly lower low, but I'm not unhappy with that because that, you know, we do get that sort of action. What I don't like is the subsequent candles. I don't like the fact that we are sitting there right at the low. We haven't made any effort to push back up, and the volume was drying off, and I could just see us drifting maybe another 20 ticks or so lower before, you know, maybe I could. What my actual thought was, okay, you know, if I come out of the position, if I get stopped out, I can still look that hypothesis for the trade can still be right later, and I can still look for that later in the afternoon, and maybe we'll get a bottoming pattern or we'll get a continuation. So that's okay. But what happened was this, you know, we consolidated, we sat there, it looked like it was going lower, and because the volume was just low, it just found some support there. I ended up taking off, you know, a fair batch of the position where I had left at that point, and that was a mistake. You know, I should have let that mature, sit with the stop, but I didn't want to. I didn't want to do that. I didn't like the short-term action, and that's the sort of conflict you've got. You've got a short-term action rate, you know, combined with your longer-term view. And 9 times out of 10, it's fine. You know, I prefer to lean on that. But in this case, it was the wrong thing to do. I should have just, you know, let it mature, let it hold on, and see what happened. But then, nevertheless, you know, I still left some lots sitting there chugging away with the long. And yeah, eventually got my first target, which was the open, pushed back up, which was a nice place to exit. And finally, at that point there, I left it and I stuck my offers in and walked away from the screen. Came back several hours later, and I'd been filled. Actually, came back just after I had been filled, but I'd been filled at 100 ticks from the first entry, which is where I'd put the offer, which was just below the gap, which was, you know, an obvious place to put it. So all in all, good trade, obviously profitable trade. Mistake there, and I think the thing to take from that is, you know, if you're looking for that longer term move, then don't meddle with the position. You know, it's fine doing that, and that's I'm not going to stop looking at short-term move, because that's really my biggest edge lies. Under high volume, you know, reasonable volatility conditions, then you can work in and out of a position, a core position, and, you know, it works well. But when the volume is drying off, when, you know, you're in a position, you're comfortable in a position, it probably pays to sit with it and just relax and stick your targets in, and if it's working, let the trade mature, let the trade pay you, especially when the, you know, the range is low. Generally, as we're coming into the sort of summer period, lower range, volume's lower. You know, if you're on the end of a low of the day or a high of the day on the short side, or whatever it may be, then, you know, stick with it. So that's what I wanted to cover on the members webinar on Thursday. I didn't get opportunity to, so that's covered now. And we'll see what the rest of the week brings. Probably back with another video later in the week. Other than that, take care, keep the risk managed. Personally, I'm still being very cautious, looking for that, you know, 1 or 2 trades per day at the moment, while the volume is low, and doing a lot of pre-market preparation, just sort of envisaging where the market could go, and then trying to find a good entry for that trade. So take care, gents, keep the risk managed, and back with another video soon.